Today's number, guys, is 25 because that to 1 is the ratio of current Wall Street insiders selling their stock positions. Yes, it looks like CEOs are making big, important calls, but is this actually unusual, and what does it mean for us as traders and investors as we face some of the key point levels that we've seen in quite some time? Could we still see a rally into the end of the year, and is this just part of what we call seasonal chop? Well, one thing's for sure, it isn't when it comes to crypto, and Bitcoin is currently in free fall. The one good piece of news, though, is that liquidation levels have occurred like we thought, and guess who's back? Yes, you guessed it, some of those whales are back and buying. So, where does all of this stop? What is happening next? And which chart should we be paying the most attention to right now? That and more in today's video. Stocks, commodities, and cryptos. Boy, oh boy, are things getting interesting. See you soon. Well, welcome back, everybody, to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the latest macro, the data that you need to know, and of course, what has Wall Street been up to, because they are making moves, and it looks like hedge funds are back at it again in these markets. It was a sea of red led by, of course, technology and big banks. But is this all the beginning of something worse? Well, let's take a look at some of the macro, the good, the bad, and the ugly, and then we'll go through, of course, crypto, maybe the most interesting market right now, and then options, because it will come back to these options this week. Insider buying and selling. You can see here, Jurian Timmer from Fidelity has a very interesting chart. And what he's doing is he's tracking CEOs and actually working out whether they're buying or selling. Now, generally speaking, you'll usually find this to be the best as a dip buying opportunity. When you see all of the insiders start to come back in and purchase off lows, that's an excellent signal. Now, at the tops, usually you wouldn't really bother with it. You can see it doesn't make or pay much attention to. But we have now just hit a number that we haven't ever really seen, 25 to 1. This means that people are cashing out, and obviously insiders across most companies are taking profits and potentially diversifying their investments. Now, why could they be doing this? Well, we've seen Warren Buffett stockpiling for a long time now, but we've also seen similarities written to, of course, the dot-com bubble, the 70s, and, of course, the 1920s run. And if you actually look at this disruptor bubble versus the 1920s, you can kind of see here, when you're taking a look at the overall size of the equity markets, you can kind of see this bubble is a big deal. Now, does that mean it's about to pop or something is going wrong? Well, let's actually look at the data of the scary moment of the last 24 hours, which probably was that we actually closed below the 50-day moving average. Now, this is the first time we've done that in 6 months, and it's very rare to actually see it go for this long without actually going past it before. And you can see here when we look at the data stats, yeah, it's happened a few times before. So how do we look at it? Well, 1 week later, 71% of the market times the market had rebounded. 57% 2 weeks later, and 1 month, 100% of the time the markets had actually rebounded and been in the green. So it's not necessarily an incredibly bad signal straight away. And if you actually have a look here from Blue Curtic, you can see all of the different tracked markets over this period. And yeah, I mean, it tends to be that even if we get more dipping, it doesn't usually go more than, well, actually, have never gone more than another 5%. So this is very important when you start looking at the S&P, which we will later on, and the Qs, so the NASDAQ, because remember, we are currently on very important support and an incredible level when you're taking a look at potential rotation from the hedge funds. Here's some other data from Nautilus. I always like to bring you guys as much as possible. So if you like that, make sure to subscribe. But I think the key here is that we're seeing a rotation underneath the hood. And it reminds me a little bit of last year when we talked about this back in June and July. And obviously even this year in June and July when we started to see other sectors perform better. This chart was something we brought up last week, which was obviously from Don's dividends. And I really liked it, which was taking a look at growth versus defensive. And what's been happening in recent days, and maybe about 2.5 weeks ago this started, we started to see defensives do better. Notably, healthcare really performed incredibly well. Oil services, one of our favorites from the last month, specifically in our private community as well. These types of stocks have been doing better than, of course, the semiconductors and, more importantly, maybe the technology stocks. And it just shows you that there's more to look at than necessarily just the tech companies, which most people do. But what has happened is we've got a two-pronged market. If you talk to anyone in alt markets right now, as in crypto, they'll be saying that this is the global financial crisis. If you talk to someone in Beyond Meat, they'll say that it's the Great Depression. And if you talk to somebody that's in semiconductors, they'll say the last week sucked, but it's been pretty good. So you can clearly see there's a massive differentiation between who and what you're actually investing in right now. And this is a very weird time when it comes to markets. Oil services was the best over the last month, but I think maybe more importantly than any of this, it comes back to looking at some charts. Now, we've got later on to look at this, but this is the equal weighted S&P 500. And you'll notice when we look at some of the other charts later on that a lot of them have all come down to key levels of demand or support. And why this is important is because if we drop these levels, then things start to get a little bit more nasty. In particular, one of the ones that I'm looking at very closely is actually the German DAX. And you'll see why later on, because it is a massive wyckoff, which if broken to the downside properly, could really spell a bigger correction is on the cards right now. Now, I'm not sure that's going to happen, but clearly there is weakness underneath the hood. This chart here from Larry Thompson shows that the one-day rate of change, we started to get more one-day over 1% declines. That tends to happen when you're seeing Wall Street make moves near the end, particularly, so near the end of usually a rally, and it can bring in consolidation. But I think the problem for investors is two-pronged. One, listed private equity indices are declining. We've always seen these usually come with the market, not go against it. And this is a huge differential, showing that all that matters right now is the top 10 stocks and their earnings. And you'll see that this week, of course, has big earnings because we've got Nvidia really to top off what has been a pretty good earnings season so far. So this could be kind of like an earning lull, but what is happening right now is we have even more differences in these actual or nuances to these particular markets because, of course, we have the big companies going ballistic and the small ones starting to struggle. And that shows that there is something wrong with the economy, and we are going to be waiting very closely on what the Fed's going to do with, of course, the December cut potential and also what's going on. Private equity, remember, guys, is usually where the bubble starts and blows over. It's not the government spend. I think that's a very important thing. Private equity is where the bubbles start. So that is a very, very important chart, and we look forward to updating that. Another one is New York Stock Exchange and NASDAQ weekly new highs to lows. Obviously, that crossed to the decline rate. When you've started to see this, either we get a bounce very quickly from the markets, as you can see here, or we can sometimes go into further declines. So this can mark a very important point. I'll just get a line here so you guys can see. And yes, it's not exact, but you can kind of get an idea here that when you get into these bigger ones, sometimes it's already crossed down by a lot, but often it can be part of a greater distribution. So you can clearly see that what happens over the next 2 weeks is going to matter a lot because it could mark the beginning of a bigger sell-off. I don't suspect it will, and we'll discuss that later. But of course, all the signs are there for current rotational weakness. You've got things like Bloomberg's percentage here of New York Stock Exchange, stocks above the 200-day moving average. You've got Michael Burry basically saying he's shutting down his fund, obviously probably to go to family office or maybe not disclose his positions as much as he has had to. But of course, this being a potential topping point, remember when the biggest, most well-known people that are either bullish or bearish start to come out and kind of give up or say something, that often does sometimes move the markets and change stuff. I really like this one here from Market Stats over on X because it does exemplify something we did with China about a year and a half ago, which was a massive bull signal for us. And I think this thing is that you can use these things time and time and time again, and it's a culmination of all these ideas together. Now, obviously, there are even more bearish stats. Don't get me wrong, bears have a real reason to be in these markets right now and freaking out because, of course, you saw 5 Hindenburg omens. We're starting to get even more of those. 5 is pretty rare. When you tend to see these, you don't exactly have exceptional returns moving forward for the next couple of weeks. You can see here a pit, which is, of course, a sideways action style market, kind of where we feel like we could be at the moment. You can, of course, have significant highs, and sometimes you even do rally through them. So they're not exactly the best reads. Again, they should be used with other stuff. But one thing is for sure is that sentiment is plunging. We've got fear under 10 pretty much in the cryptoverse. We have fear in the stock markets near all-time highs at extremely bad levels. And you can see here the latest University of Michigan consumer sentiment was in the dirt. And what this generally marks is a very important point for alt assets, particularly gold, which we've been a big fan of for now almost 3 years, if you can believe it. We've been bullish on gold now, and it's been an amazing run. But recently we saw volatility. So now that gold rallied and then dropped back again, it becomes quite interesting because remember, we thought it would hold down for about 1 to 2 months. We're now 1 month into that. So we're getting close to the 2 months. And then, of course, we expect between 2 and 3 months, generally gold to be looking a lot better. So we've got the chart on that later, but realistically, gold is starting to look a little bit more tasty when you're considering everything that's going on in the world right now. Now, is this all normal for stocks? Well, to answer, yes, it pretty much is. We knew that when you get 7 months up on the NASDAQ, that the data stats were terrible. Subu Trade had here 2 weeks after seeing this read. Remember, when did we get this read? The end of October, that we would be 0% of the time up with a couple of good data points. Then 3 weeks later, only 14% of the time would we be up. That's where we are right now, guys. Then 1 month later, yeah, not too good. But 2 months later and 6 months later, much, much better. So again, you might be looking at this market bearishly, but you've got to remember that a lot of Wall Street guys, as we've argued, will probably need to make their bonuses. So they're trying and as best they can to try to hunt where they can make profit. And that brings us to a point where leverage is coming in big time. And I think there's going to be quite a lot of shenanigans over the next month and a half as Wall Street tries to dip certain things to get buys in, liquidate certain positions, and of course, the eventual saga here of whatever's going on with crypto. Now, if we have a look here at the Prime book, you can notice that, yes, we've seen a little bit more defensive action from the hedge funds recently. They've been going all over healthcare, trying to bounce that. Now, I think the healthcare initial move is over. You guys would see on a chart when you load healthcare, it's hit a massive resistance. But still, they've been clearly angling in on a couple of sectors to try to make their money for the end of the year. And certainly healthcare was where they just recently piled into. But I think it's important to note that generally hedge funds are often wrong. And what they're also doing while they're doing this is they're trying to short the market. So you can see here from bar chart, this is a very interesting one. It basically says that Wall Street hedge funds are trying to short this market at the fastest rate they've done for a while. And you might say, well, that probably means it's going down. Maybe initially, but it does usually lead into a potential ripper rally. So you've got to be really on the cards here, especially around these levels such as 600 on the Qs and the weekly 20 moving average on the S&P, because remember, these levels do tend to be where the markets can do big flips and move on the way up. And the reason why that could happen is because S&P 500 earnings have been strong. We've noticed this and argued this for a while. If the stock market has got good earnings, it traditionally will not usually top out. So basically, when earnings sentiment is on the rise, we can get lulls in markets. But what happens is we have another earnings season coming next year. And what do? They all get optimistic and they say, yes, we're going to buy into the next one. And I know the news articles right now are the AI bubble, the AI bubble, the AI bubble. And don't get me wrong, I think it's a bubble. But at the same time, when everyone's writing AI bubble, and I saw it 10 times when I loaded up the different news websites today, it's usually not over. It's just, it hasn't been in the past, and I'm not sure it's going to be in the end. And one of the reasons why this is have a look here at the bottom-up consensus EPS growth estimates. And again, this is just forward projections, but this is what Wall Street will be looking at. Can you see the elephant in the room? What is going on here with the Russell 2000? They expect exceptional earnings, guys. They're going to be loving themselves next year. Now, the reality could be not as good as the expectation, but the thing is that they often will buy into this idea. So you've got to remember that this is kind of the good news here for the market. The other thing is with NVIDIA earnings coming, you've got to remember what just happened with RAM price. If you go and buy a new PC right now, I bet you your RAM has doubled potentially over the last 2 weeks. You think about buying NVIDIA Super because you want to play the latest game, Battlefield 6 or something like that, guys, forget about it, because guess what? You're not going to be able to get an NVIDIA Super because they're probably not going to make them. Why? They're going to take the chips, they're going to take that RAM, and they're going to put that into the data centers so that they can make more money. So NVIDIA is likely to have quite a lot of overall gains. And do remember that the last earnings on NVIDIA, we've got a special on that in our next video, have been quite positive. So let's talk crypto for a second because, of course, stocks are one thing and we're not really down that much on stocks. But crypto, boy, oh boy, is Bitcoin getting dangerous now. Fear and greed hit 10. That's pretty fearful. That is definitely a freak out. Daily sentiment index in the dirt, guys. This one here from tradefutures.com. And you notice, look at this, and Seth Golden, I believe. And this one over here, you can get an idea. It is in the dirt. Now, interestingly, when we had sentiment this bad in the past that's just dropped off a cliff, that's when we started to see big whales come in. And you'll see in a moment, because this chart's actually quite interesting, because not only is sentiment terrible, and it's around a point where you often see consolidation bases, but we've also started to see a couple of other things. Bitcoin's gone, of course, through the death cross, which is considered a very negative sign. Here are the data stats from that, from market stats here. And you can see everyone always freaks out about death crosses. I tend not to really care too much about them, but they're a good signal and a good thing to put on your thumbnail because, again, the stats are really 50-50. But have a look what just happened. Number of entities with balances over 1K BTC, and you can see suddenly, boom, there's a big purchase coming in. And that's the first time we've seen whales. What do we consider whales? One of the ways, at least, tracking them. This is over on our X, links in the description. And they've come in big time just at this liquidation level. So very, very interesting to see this. Now, of course, Bitcoin's gone down to the 91K at the time of this recording, but this is a sign of life in the Bitcoin market for the first time. The whales may have just started the bid process. And remember, the speculative mood recently for Bitcoin has been terrible. It's been in the dirt. We saw this chart here, which we shared last week, which showed us that this is the major liquidation zone. What happened? Market hunted it. We're now underneath that price slightly. Do we see a bid? Well, as we often say, we say patience, react, don't predict. We love this level. Don't get me wrong. I actually like this level very much for bid buying. But at the same time, we've only just seen the whales. Do we now see a bid? Another thing that's happening is everyone's going short. The liquidation map here is showing, and this is bigger now than this particular image. The liquidation map is showing that more people are trying to short. And when you actually look at this, it looks like a colorful Christmas tree of some kind. But what you will notice is a heat map here of certain levels that could be really targeted. A lot of people shorting, obviously, up here in the highs, a lot of retail getting involved, and I expect this to explode over the next 24 hours as well as more and more people go bearish. The reason I know this, guys, is because I got text today, and I always know, and I want to know your comments down below. Have you received a text from a random person that you know is not really in the world of the crypto, and they're asking you a question about Bitcoin? Is Bitcoin a buy? Is something wrong with Bitcoin? Is this over? Is it over, guys? You know what I mean? You know those texts. If you're in stocks and investments, you're watching this channel, I'm sure you've got a family member or a friend that thinks you're the guru and you need to get that one out there. But I've received a few of them today, and that tells me that we're sniffing a key point here because clearly everybody's got an opinion on it, but more importantly, people are scared. Nobody likes crypto. We know that due to the search functionality. Fear is everywhere. This is much worse, of course, now under 10. And we know it's the end of the cycle. So, of course, you're going to have polarized opinions. A lot of you guys are going to tell me, Tom, it's the end of the cycle. It's over, it's over, it's over. I understand. Statistically, it is. But, of course, I'm not really too interested in that so much as I am more interested in how do we react to these current price areas. Because, remember, from a trade perspective, Bitcoin could still have some exceptional rallies in it. And the question also comes up is, have we seen the end of the general run? Tokenization, the storyline. Did that really hit the peaks? What about the Texas Stock Exchange? What about these ETFs? Have we just eroded enough? Well, we'll see what these whales do because now they're re-entering. The whales tend to tell more of a story than anyone else. NVIDIA, guys, earnings this week, obviously Wednesday after the close. Look forward to the Tuesday close video. It will be earlier this time around, and we'll have some amazing data there. And of course, NVIDIA is expected to move as much as a GDP of a country in a year in a few minutes. So it's 8.5% according to the options market. Let's now jump on over to the options and the S&P. Then we'll go through some lead indicators. First off, we'll start here with the S&P. Clearly a major support. At the time of this recording, we're sitting on this level. And you guys will see in a moment that it is very important to be watching this zone particularly. We actually ended up getting down to around the 66.75, which was the most put struck level of the last 24 hours. And you can see here that it's clearly a big important area. Now, is it enough to say that the market's over and it's all gone? Probably not, and you'll see why when you look at some of the other reads in a moment. But have a look here, everyone. Look at this. The puts, the puts, the puts, the puts. Yes, there they are, 66.70. So right where we are right now at the time of this recording, we have a massive put level. And what you'll notice is that if we now look at the 21st, everyone's stacking puts at a certain couple of zones. So we've got here the 66 kind of 70 zone. We've got the 6620, 6600 zone, which is big, and then the 6500 zone. So they're the three put levels, but this just came out. It's clearly the zone. And if we keep selling off, get ready for waterfall, because basically we could be at 6500 very, very quickly, because you can see how many puts are here. That'll need hedging. But for now, the big key is this level. This is pretty much where the support is, and it's key across so many different reads. Let's have a look now at NVIDIA. NVIDIA's not too interesting in the options world. You can clearly just see there's this 200 call wall. Not much going on in the puts in NVIDIA. What about Tesla? Tesla tried its best to get back to 424.30, failed to do so, sold off that level. 400 remains the big key, and 380 for that one. And IBIT, now this is where I think it also gets interesting, is that we're suddenly getting a huge strike of puts just above current price. So we're sitting at 52.1. Obviously 53 is where you're getting, a huge amount of puts. And it kind of does support that idea that whales are purchasing in and that we're close to this low. Now, do we have a turn? No, it is a guess. It's a real guess. Around this 90, 93, 94K range, obviously a bit lower now. This is where we look for the whales. We look for the big positions. We've seen whales. We've seen put support. The question is now, where's the bid? But I don't kind of expect it to get much worse. It could, but it does start to look like there's a bit of support. What do you guys think in the comments down below, though? Do you agree? I usually wait for price action to actually show me a bids there before I trigger. Number one is TA. Number one. Let's have a look here at gold, 376. Not much to talk about here on gold. It's a little bit underneath the current big put wall, and 360 remains key. I like gold, and of course, we'll talk about it in a moment. All right, let's have a look here at the first things. First up, does the bonds market care about everything that's going on? The answer is simply it doesn't seem to care just yet. We will update. I expect there to be some care at some point, but not just yet. The VIX obviously spiked above 20, which we always pay attention to. So as you guys know, a 25 plus hold usually brings the pain. So that's usually where you actually start saying, okay, we're in a spiking level here for the VIX. But anything above 20 basically is where you technically have got more volume and bears into the markets. It's been a while since we've tapped a 25 plus. Obviously, the last time was in March. So you might say over here we tapped it, but we didn't close it. So yeah, 25 plus, that kind of signal, things can get wild. And that's usually where you get the waterfall effect. So if we go a 25 plus close, then you usually will have a waterfall effect with the options. And all of a sudden we're sitting at much lower levels on the NASDAQ and S&P. Here are some signals that could be important. RSP, equal weighted market, currently at support. So currently we're kind of sitting around this support between 182.50 and 185. And this is a very important zone because, of course, it shows us whether we've just got rotation or we have weakness in this market. Another one is technology versus SPY, which actually held up pretty well. So this is showing that it isn't tech completely getting blitzed yet at this point in terms of versus the SPY, and semiconductors versus the SPY is holding its low, which I think is very important. Dollar index, no breakout above 99.60, but of course still holding the daily 20, which makes it more bullish than bearish at this point. And gold has pulled back. And what I'm looking for is I'd like to see gold around 39.50. And if it gets down to 39.50, I'd like to see a bid off there, off this previous demand, hit that daily 50 like we've been talking about, and then potentially double bottom base out and keep going up. If that's kind of what I'd like to see from gold. Silver similar. We warned against this rally because we thought it was probably short-lived, and so far it has been. It's come back down. And around here is not too bad for silver. So we're probably looking at maybe a 48.50 or something at some point, hopefully. Now, what about Tesla? Rallied up to 425, sold back off. Still, technically, the bears are in control of this market, and it didn't manage to get above 425 with the close. So that's the first sign of somebody coming back in for Tesla. At the moment, of course, the bears are in control. Now, we did mention before that we're looking at the DAX, and I am really focused in on this DAX chart. You can see I've got an alert under here. Technically, it should be under 23,000, but I want to know before. So you can see here this mass distribution. These are worrying signs, but what I often find is that right at the 11th hour, you get like a potential change or a trap or something like that. So the reason we're looking at this will become more clear in the next video that we do, but the DAX is important, and we've used it a few times over the last 6 years of doing these videos to show you guys before the S&P really gave up. The German market often did tell us before, so could be a lead again. Nvidia, we've got a key support, 180. Watch that because, of course, 180 gets given up. 165 is the next zone. And NASDAQ, you can clearly see here, guys, this 24.6 zone. We've talked about the lower high. We've talked about the 50 being nowhere near as good. The first 50, fantastic on the dip buy. The second 50, no good. We're going to go re-bullish, really. We need to see this or something else. That is a break above there. Now, if we drop this position, how bad could things get? I'm thinking somewhere in here, 23,000, kind of 100. Now, that would mark another 6-ish% off the market, which would be correct because basically your key levels are here and here. And the reason why those are two important zones is this one here is going to mark the weekly 20 moving average for the S&P. So obviously a very important hit. And this one will mark kind of that further 5%, which is the worst case scenario we've usually seen when the daily 50 is given up after having so much strength. So remember those stats from the start of today's video. What they tell us is that traditionally there are bid buys. And I think that's the important thing here. The structure of the strength tends to mean there is a buyer of last resort relatively soon. And that, I think, is a very, very good thing. Now, you might say, well, this time is different. Every time could be different. The key is, do you want to use the structure or not? Or are you going to just basically use your opinion? And I think the key is always to bring it together as much reasons as possible. So for the bears out there, guys, right now, of course, you have as many reasons as possible to be bearish. But for the bulls out there, the main thing is that you've got to look at the general earnings. And I think they've been good enough and in the top stocks enough to be holding this market up for now. Remember, the economy and the stock market are different. There's definitely problems in the economy right at this point. Now, in terms of Ethereum, we did hit this secret mini bull level I've had on the charts for a while, so that's interesting. No break above 32.58, so obviously this is going to be a resistance break that I think could bring the bulls back. And you can see here when you're looking at the Bitcoin charts, which we'll do here, this market has liquidated those lows. So it's liquidated everything through the 93.94, which is what I was looking for. We go to a 4-hour chart. We never got above that 97.5, which remains a very important level. But what we can actually do now is we can see that, of course, the big traders have come in, as in some whales have come in, the volume's coming up. And if we then bid above this price, which is obviously a huge supply at this stage, get through maybe this 4-hour 20 moving average, then we're starting to repair structure. So what's the trend right now? It's down, guys. How much worse could it get? Look, it could get worse. Of course, people are floating all sorts of prices to me. A lot of people are floating 84, which is the next logical zone. So that's the real pain train. So 84, then a bounce. Of course, there is even just keeps going down and gets absolutely smashed. But I think 84 is probably the key zone that I'd be looking for in terms of the next support. Otherwise, we're waiting for patience to see a reaction to this whale purchasing, because we have seen whales come in, and I have to think they are buyers at this stage. Guys, what a fantastic video. Thank you so much for joining us. I know we had a few stream things there as well, where we were all randomly live for Monday, all sorts of software problems and internet issues. But thank you for bearing with us. Please make sure to follow us over on X. Follow me on LinkedIn as well. I've got a great one on Burry there. If you want to read it, definitely follow there. And of course, if you're interested in finding out more about what we do, you can sign up to our free stuff and also our courses. To summarize these markets, it looks pretty panicky out there and everyone's becoming a panicking. But at the same point, you've got to realize we are just only a little bit down the S&P and NASDAQ. The structure, most things still point towards buy the dips. And this does look like some Wall Street manipulation. Bitcoin, on the other hand, though, that one is a totally different story. And I will have some new information on that next week as well. as I'm going to talk to hopefully a few very influential people in the space. Thank you so much, guys. You have a fantastic day. Keep learning, and we love this stuff, of course. So have a great one. Bye.